All right, folks, welcome back. Still feeling awesome. Thank you very much. So we are looking at the dollar index. This is our weekly chart, and you can see we did dig up into the imbalance we had at the time of the recording yesterday. It went a little bit past that, dug a little bit deeper into this bearish order block. Now again, when we get to euro, I'll show you the economic calendar that has our concern for tomorrow, but nonetheless, we did see continuation on the upside on dollar digging into this bearish order block. So we have gone completely back up into this down close candle and overshot the previous week's high. So do we work higher into the mean threshold of this bearish order block? Because I personally think that this high being taken here, I'm favoring still this. Okay, let's put it that way. Now, I might be wrong because tomorrow we have high impact news coming out for euro, and we have unemployment data coming out for the dollar as well. So around 7 o'clock hour, 7:30 or so, the EU will have its monetary policy, and then at 8:30 or so, U.S. time, New York, the unemployment numbers will be released. So it's not non-farm payroll, but it's updated employment data. So it's going to be volatile tomorrow during the New York session. So just be mindful of that. All right, dollar index daily chart. You can see here we have this up close candle here. It trades up into that. So we had a further expansion on the upside. Hit the order block. So when we look at the lower time frame, hourly and 15-minute time frame, this dashed line is being anchored to the opening of this daily candle. Okay, so the opening here, that's what the dashed line is. It's the daily bearish order block. We completely went outside the old premium high of the imbalance on the daily chart. But look at the high down to the low. We traded up into a deep, deep premium bearish order block, cleared the relative equal highs here, which we'll look at on the lower time frame. I mentioned we would probably do that. And we did, in fact, get that on the upside. Now, I'm not making a big deal about this because there's not a lot of pips, but we did see what we were expecting in terms of today's Wednesday's trading. On the hourly chart for dollar index, you can see here the relative equal highs I mentioned yesterday and the bearish order block on that daily chart. It trades up into that. So the relative equal highs in here and this imbalance there. We left a little bit open still. Notice that this high here did not go all the way back up to this low. So all of this here was an imbalance, but up to this point here now. So eyeballing it, it's about right here, leaving this portion still open. I want to see it stay open, okay? Because we've already purged the liquidity above the buy side liquidity pool. It's above these two equal highs. So the market drew right on up into that daily bearish order block, and it did it with a run right into it, and then it did not continue. Notice that it went up, then rejected that. That's what I'm looking for. Now, my only concern is it's done this ahead of the high impact news for tomorrow for dollar and the euro. So if it would have done this and traded off like that during the news release tomorrow, during the New York session on Thursday, then I'd be looking for a breakdown and trade into a bearish breaker, and then you look for longs on your dollar and cable maybe. That's what I'd be expecting. But because we did it ahead of the news driver, I'm a little cautious as to what to expect. And frankly, I don't know. Okay, so I don't know, and it's fine because I'm hoping the volatility tomorrow during the 7 o'clock hour, 8:30 hour gives us some kind of a excitement or animation to the market. Then any imbalance or liquidity pools that are left in its wake, then it sets up opportunities for day trades and intraday scalps. And that, to me, after the news hits the market, that's the better trade. So all this week, if I was actively trying to trade, I would literally be on my hands sitting, not doing anything, and waiting until tomorrow's data release. And then whatever's in play after that news hits the marketplace, that news being, again, the economic news in the U.S., 8:30 when the employment numbers hit the market, and the ECB with the monetary policy statement. Okay, here in the 15-minute time frame. Right from Jump Street on midnight, New York local time, we rally up. Small little decline in here in London. Then we rally. Order block, the 3 down closed candles here. That's your order block. Volume imbalance, notice that also. And we trade back down into the order block. Buy side here, and then the daily bearish order block, which is that dashed line I mentioned. Optimal trade entry. New York open. The bias was we were likely to see continuation on the upside. I didn't want to see that opening on the weekly chart on dollar close, but it was likely to happen. So that sets the stage for this run up into this. It slams up into it and then rejects immediately. So do we break down tomorrow, or do we run higher? Because if we do go higher, it's probably going to be very bullish for dollar. I don't think going back above this high here would be go one more time higher to break down. I don't think that's necessary now, because we've already seen the initial run up and then rejection. So while it's not a lot of pips, to me it's indicative of, if it goes higher than this high now, it's probably going to go up for a little bit for dollar, which doesn't make any sense to me, but nothing makes sense in the last 18 months. So hands in my pockets until I see what happens in the New York session. If I can find something to live trade entry and do all that tomorrow during these reports hitting the marketplace, I will do that as a teaching element for tomorrow's video. But if not, then we'll just obviously do a recap and there it is. But for now, just know that we're sitting on our hands waiting for the news to come out, and whatever volatility enters the marketplace after these 2 reports hit euro and the dollar, then obviously we'll be in a better position to see what's likely for the intraday volatility moves that would transpire until the close at London. All right, so here is the euro dollar daily chart, and the lower chart is the futures contract on the euro futures for December. The Z represents December's delivery contract. So if you want to pull it up on TradingView, I'm going to show you what one of our students, Tori, thank you very much for sending me an email. I got to it last couple of weeks, and I didn't mention you earlier as credit for showing me how to do it with TradingView. So you can all thank Tori for showing me how to do this. So I'm going to show you how it's done. All right, so we're going to be showing the addition of this lower chart down here, how to use that. You'll use the compare tab on TradingView. And once you do that, everything on the screen, you'll just repeat. All right, with that out of the way now, you know how to make this compare between 2 markets. You can obviously do more than 2. This is nice for using for like SMT divergence. So that way, sometimes I've struggled where if I'm scrolling through the data, the compared vehicle or instrument that I'm using in contrast to, like, say, the dollar index and euro, or euro against cable for SMT divergence. As you scroll through, sometimes the lines start to get really close to one another. It's hard to really show the divergence. Whereas this, having it go on the new pane, it allows you to see the relationships better and cleaner. But this is the old lows that I've been wanting to see those traded through. And you can see those same respective lows on the futures contract. did in fact get taken out on the futures market, but notice that it did not get down to that on the cash market. So what does that mean? Well, let's put it this way. If euro was in a bullish market, let's assume that euro dollar is bullish. Weekly suggests it's going higher. Monthly suggests it's going higher. Daily's got a nice market structure, and there's a reason to draw up to a higher premium level for liquidity purposes, or an imbalance that needs to be rebalanced. Something that's drawing price higher, okay? If this type of phenomenon occurs, it's just like SMT, okay? In fact, it is SMT between cash and futures markets. When you get into the study of S&P day trading, you'll look for the relationship between the cash market and the futures market for trading SPOOs or E-mini S&P. If the cash market fails to go lower when the futures market does go lower, generally that is very bullish. And in this case, we don't see cash going down to take those lows out, whereas on the futures market, it does do that. And then we have this nice pop up in here. This here is not what we want to see when we're in a consolidation market, because this can eventually go lower, and then the cash market can catch up with the futures market. Now, when I say futures, this is trading as a commodity market, and these expire, whereas the cash market, trading Forex, doesn't necessarily expire. So the relationship between the two is that cash is king. Okay, cash controls futures. Futures can be overzealous at times because that is a real market with real supply and demand factors. So when it is going further, it's because there's real orders there in the futures market that allows large traders, large fund traders, to be attacked a little bit more. So the futures can reach a little bit beyond the scope of what would be seen in cash. But generally, cash keeps futures reined in. Not always, but when there is a divergence between the two, cash generally will be indicative or predictive of future price delivery. Okay, so if it's a question of knowing which one to trust more, and again, this is more specifically aimed at when the markets are really directionally poised to go higher or lower. There's a strong directional bias when your analysis is heavy-handed on one side, where it's really hard to argue the opposite side of the marketplace, where it's just so overwhelmingly bullish or bearish. If you see a divergence between cash and spot, like we have here in the top chart here, Forex, and that of the futures market, because all the currencies that we trade, they're COMDOLs. Now, COMDOLs are commodity dollars. That means there's a futures market that trades on that currency. Canadian dollar is a COMDOL. The Australian dollar is a COMDOL. New Zealand dollar. These are all markets that have a futures market. So when you're looking at the relationship between cash and futures, cash will many times not support price swings. Old highs being taken out, not seen in the cash market, that's underlyingly bearish. Now, it doesn't mean going there just because you see that every single time that's a trade. You have to include and incorporate the aspects of current market structure, macro sentiment, in the sense that is it bullish, is it bearish on the larger, higher time frame charts? Because if it's not there, then cash can just be having a stubbornness at the moment. And it might create a small little, like this move here, not making that low go below these lows here, whereas the lows here were taken out in the futures market. That's not seen in cash. So this being a divergence, if this had been going higher, and if we weren't going sideways like we have been for a while now, this would be extremely, extremely bullish for this particular currency. But because we're in a market that's consolidating, and it's because the last 18 months, nobody knows really what's going on. Okay, no one knows. And because of the effects of all this pandemic, this whole element has caused a lot of adverse sentiment to risk, meaning that large funds are really sitting on their hands and they're waiting. Now, what are they specifically waiting for? That I don't know. Okay, maybe their departments have said, look, dial back risk. Let's sit in cash a little bit heavier than we normally would. And that's why we're seeing the markets sit in these long-term consolidations like this. That's why also I've been saying that we're primed for a black swan event. Not that COVID isn't a black swan event, because it is. The idea of an attack of some sort, some kind of a war type scenario, or a terrorist attack, something to that effect, that's where we're at. And I'm not going to go into some tinfoil hat, but I'm just saying, it's a reminder, this is the setting we're in, because from an economic stance, there really isn't any stimulation that would warrant large funds to pour money into anything, because differentials are not all that exciting right now, the rates between the interest rates, and all focus is on shutdowns, mandates, how's it going to affect commerce. Like, all these things are not positives, but they're not set in stone either, because there's a lot of pushback in a lot of the countries that are seeing mandates come down. So that's what I think is happening, and that's why we're seeing this stagnation in the marketplace, where it's just not moving a lot. Something's going to happen eventually. How long, I don't know. Okay, that's a variable that I don't have an answer for. But what we're waiting for is something to create a rush of momentum. It might result in our analysis, and my specific analysis, being wrong on a week or a day, and it just rages against that. That's okay. I'm wanting something like that to happen, because then what it'll do is it'll remove all of the complacency to sit on their hands, and they need to get money moving again. So that would create new sentiment. It would disrupt the present complacency in the marketplace, where it's just better to be not assuming risk right now. Well, investors, large funds, they can't do this in perpetuity. They have to do things to stimulate growth. Otherwise, investors will say, well, look, I'm not getting a return here. I'm going to go elsewhere. Where will they go? I don't know. But they won't want to stay with these firms. So the firms will be inspired, if you will, to put money in play. Whereas the central banks right now, they're not seeing their level of counterparty being required as it has been in the past, because risk is so elevated right now. No one's willing to assume a lot of positions, and everything is skittish. If you look at Bitcoin, which I'm not going to pull a chart up now, it just tanked like 10,000 points, like that. And this is what I'm talking about. That's not a signature or a point that you could trust as a global reserve currency. That's why I'm telling everyone that Bitcoin will never be the global reserve currency. That is not going to replace the dollar. I believe the dollar will be replaced with a digital form of itself, because then it will be absolutely controlled 100%. And if you don't comply to what they want, then they'll just take your digits away. Whereas right now, there's legal tender, and they're slowly working away from that. So there's a lot of things on the horizon that's causing such a large degree of pushback in terms of risk. So no one wants to assume a large portion of risk. Large firms don't want to end their careers, okay, or stain their previous records by taking on risk in a otherwise obvious setting where risk is so elevated. So in layman's terms, and very short and to the point, because of everything that has happened in the last 18 months or so, COVID this and COVID that, the lockdowns, the effects of the lockdowns, I told you when we started this that we would not start seeing the real ramifications or consequences until around 18 months. Well, folks, we're here. So because of that, there has been this drawback in willingness to speculate on a large degree, and any small reaction to negativity or news that is negative will feed upon itself. And that's fine. We want that. We're not wishing any harm on anybody. That's not what I'm saying here. I don't want anybody to get hurt financially. That's why I teach. I want folks to know how to do this to be profitable. But if you don't understand the importance of waiting for this event, and it will happen, I just don't know what will be the catalyst for it. I think personally it'll either be the result of another lockdown, which may or may not happen, or civil unrest kicks out across all the countries. Like we're starting to see in France, we're starting to see it in the UK. People are starting to get ticked off and saying that, this is the way it's going to be. We're going to get out in the street and do what you say we're not supposed to do. And I'm all for it. That's the kind of stuff we need, because what's occurring is not lawful. And they're trying to break everyone's spirits. And the market is reflecting that, because it's showing that there's no interest. Think about it. There's a lot of students around the world, and I said I wasn't going to go into the tinfoil hat, but I had to touch on this, otherwise it won't make any sense. There's a lot of folks out there thinking, why am I going to college now? Like, what's the point? Like, everything's changing so fast. Should I be wasting my time with a college degree? My personal opinion is no. No, absolutely not. So I get a lot of students that come through this mentorship or just watch my YouTube videos, and they'll send an email to me asking what my opinion is about them going to uni or university. And I always say it's a personal choice, but I personally think that it's a waste of time. None of my degree, none of my studies, none of my certifications, none of that stuff found me into a job. Okay, it didn't deliver me to any of that. And I came up when computer programming and things going into online, all that gaming stuff, like that was where I was trying to go. Like I was going to go into the business side, and then I was going to start my own gaming company and design software for games. And it just didn't present itself. Now, one could argue and say, well, I just failed. Okay, but there's a lot of folks that came up when I came up with computer programming and information systems that did not find our way into a job. You had to know people. You had to have a relationship that offered you an avenue into the company. And right now, the question is this. If everyone's questioning what they should be worrying about right now in terms of, should I be worrying about going to college and getting into debt? And what happens if, I can't get a job because maybe you're a person that says, I'm not going to take this vaccine. And they're saying you have to take it to get in. Well, that makes the decision easy now, doesn't it? You don't go. But if you are willing to take that jab and put this stuff inside your body and comply to that, does that translate into you getting a degree, then finding a job that's well paying and getting yourself out of the debt you created while you're in school? No, it does not. So my humble opinion, and I may be wrong. I'm just answering this because I get this question a lot. And now because of all the things that's been going on, students here that are young and folks that are on the YouTube community, they're asking as well. And I'll touch on this, in a setting that's not on YouTube. So I can't talk like this there because they'll obviously censor me. The best advice I would say is to learn how to invest like you're doing here. Now, when you invest, that doesn't mean 24/7 investing. Just like day trading is not everyday trading. Successful investing, speculation, and trading is understanding risk. It's the highest form of understanding, is knowing when that your probabilities are so low that no matter what you do, it's probably not going to pan out in your favor. Because of that, this is what makes the retention in this mentorship so variable. Because students come in, they see something in the chart, or they see somebody else say they did something, or they think they saw something forming in the chart and their gut says it's going to do this, And I may not talk about that, or I may be against that idea, and then it pans out. The student will think, well, I've overcome the master. I've overcome the teacher. Now the student becomes a teacher. And what happens is they leave the mentorship or they go into real money trading, and then they hurt themselves because that one little thing that tricked them into thinking they see something right now because they're impatient. And I understand it's a little bit unnerving right now. You don't know what's going to happen. Maybe you got sacked. Maybe you don't have a job anymore. Maybe you're staring at the idea of your employer saying you're going to have to take this shot to still stay gainfully employed. That's a decision on you. I already told you many times, I'm never, ever, ever going to take that stuff. Never. And that's just the way it is. So if you decide that you're going to take that, then obviously you'll be in a position to, I guess, keep your job. If you choose not to and they sack you, then you have potential legal recourse, because there's going to be a lot of things, unless this thing really spins out of control and everybody just bows down to all this and every nation loses its sovereignty, because really that's the goal here. You don't understand that, but that's really what they're aiming for. All of the country's sovereignty is being erased quickly, and they have to break everybody with this medical apartheid, and you're going to either fall in line with what they want, or you're going to resist it and say, I'm not going to do it. So how do you resist it and not be in a position where they can affect you? Well, you have to be an independent thinker, and you got to be able to find your way in the financial markets to make money. And when I say this, it doesn't mean get rich. You all need to change that mindset real fast. Okay, every one of you want to do well, and I get it. Everybody wants to do well. But right now, you just need to be able to make what you need to live, and just be content with that right now. Because if you can do that, you can get wealthy. But right now, you need to lower your expectations, folks. Seriously, like, I cannot stress this enough. You need to just simply slow down. Don't think about all the fast and furious. Don't think about all the glitz and glamour, Instagram stuff. Put that to the side. Even signal services and trying to get, a lot of notoriety. Forget all that for right now, because I'm telling you, in the next 12 months, things are going to become so difficult. None of that stuff's going to matter. All of you are going to be wanting to send me emails saying, hey, what should I do just to get by? And I'm answering that in advance right now. You need to learn how to do this. And that means if you just find 10 pips once a day, twice or 3 times a week, that's how it might need to be for you. And there's nothing wrong with that. Don't think that, except this is specifically for the males here, okay? Don't think that, well, I'm not going to look for just 10 pips. That's, it's weakness. I should be able to get up there and find those 20R trades. No. Because if you can find 10 pips consistently 2 or 3 times a week, that's all you need. That's all you need. And you can do things like FTMO, all these funded account type things, and you don't need a job. You don't need to do all this worrying about, well, I don't have enough money. There are people out there that will throw money at your face, okay? Because they're all thinking the same thing you're thinking right now and what I'm talking about. They're all scared, folks. They're scared. And maybe some of you are so nervous that you just don't want to reach out and say it to me because it would seem like weakness to you. I'm concerned, okay? I'm concerned for all of you. I'm concerned for the folks that I don't even know outside our mentorship, because it's going to get crazy. It's going to get really, really difficult. But in these difficult times, these markets are not going to flatline. Okay, they will not flatline. There will be opportunity, but you have to be able to sit still or work in these extremely small time frames and look at that as winning. That's it. You're not trying to have trophy Olympic-sized wins in R's so you can go on social media. That's how most of you got here. You found me through social media. So your mindset is already tainted. You already think like that. Whether you want to admit it or not, you have been influenced so far and so deeply by social media, you feel like you're going to have to leave your fingerprints on the world through that mechanism, and it's not necessary. In fact, it's not something you should be doing at all. So by reducing your expectations and lowering your profit horizons, and think to yourself, okay, I only need to do 10 pips. Even in slow, stagnant markets like this, you can do 10 pips. 10 pips, folks. You know, that's that's something you can find very, very consistently, even in this stagnation. But I know there's a lot of you in here that aren't interested in that because that doesn't fit what you wanted to learn how to trade. Well, guess what? If the markets are not going to move for you in these higher time frame moves to provide you these long-term swing trades or position trades, what are you going to do anyway by default? Do nothing. You're going to sit on your hands. So how long are you going to do that and feel like you're getting somewhere? You're not going to feel like you're getting anywhere. And you're going to think, well, this doesn't work, so I'm going to go try to find something else. When I'm asking you, just look at the charts. They're not moving around that much. So you're forced to either do nothing or submit. Submit to these lower time frame charts. 15-minute, 5-minute, 1-minute charts. Get your 10 pips, get your pound of flesh, and leave. And don't worry about if a big move comes later on or you miss a big move. Who cares? Who cares? That's the same mentality that if you're working your job and yes, you meet your ends and you get to feed your family and you do the creature comforts that you're used to for the last few years, but you think of somebody else that does well or better than you, or people that win the lottery, and you think, oh, well, you know, I wish I could do that. That's just torturing yourself. You can't get what they have because they have it and you don't have it. It doesn't entitle you to it. So when you look at the marketplace, don't even worry about what other people are making. That's a testimony of your infancy in this. Because if you care what anybody else is making, your attention's off of you, where that's the problem. You got to keep your business your focus and mind your own business, because everybody else's results, 90% of them are fake. All of them are lies. They're fluff. Okay? And unless they're substantiated by hard evidence, and even if it is, and you see somebody that has a real track record, they can prove it and they can do all those things, how does that make you a better trader? It doesn't. The only thing it does is give you that measuring up facade that you have to overcome. When you don't have to overcome any of that. Don't even invite that into your development. That's backwardness. You going the opposite direction. You're not going towards your goal by looking at other people, not me, not anybody on social media. Nobody should be ever placed on a scale opposite to you to see how you measure up. More so now than any other time in your development. Because if your head's not clean of all that garbage and your focus is not dialed in on yourself, and I'm not teaching you to be selfish and pompous. I'm teaching you to be disciplined and keeping your narrowed focus on yourself. Because if you allow yourself to be distracted right now or going in the next 12 months, you're going to really suffer. And it's going to put back so much time of development and undo a lot of the things that you've actually done well, because you're going to start thinking toxic thoughts. And you don't want to have that now. Okay? So anyway, I went off on a little bit of a rant there, and I felt like I needed to do it anyway. But I was speaking to a lot of you in here, and those of you that more or less pushed those buttons in email, the staff sent them, you know who you are. There's a lot of you. But that's my answer to it all. It may not be the answer you want. It may not even be the right answer, but that's my response. Okay? So let's continue on our discussion here with euro dollar and the daily chart on euro. Okay, we traded back down. And I mentioned how this breaker here, I didn't want to see it come back down and touch that. Now, it has yet to do that, but it obviously may do that tomorrow. If it trades down and digs deeper into this bullish breaker, look right here. We have the order block here, a small little imbalance there, and that might be a point of interest for us should it get down there, because it's the 80 level as well. You know, do we hit that and then go back up a little bit and then start working towards this, or do we not go down there at all and just rail against this level here? You know, I don't know. But if I was on the ECB, I would spike it through here on the news and then dig it down deeper. That's what I would do. Now, again, I'm not there, and that's just an opinion. I'm making a case for what I would personally do to just mess up everybody, because this entire week we've seen down. Okay, so Monday, Tuesday, Wednesday's trading, it's trading lower. So everybody thinks the market's going to keep going lower. And most people don't even look at the economic calendar, so you have no idea what's coming. So I think tomorrow's disruption will be not going lower initially. I think it'll try to go higher. But if I'm wrong, watch how we trade. If we get to 117.80, we might get a snap off of that, and what we do there, remains to be seen. Euro dollar on the hourly chart. I mentioned yesterday we were in here, and we were going to go lower. I drew your attention right in here. It went down to that, and now we're back up into it in this range here. This buy side imbalance, sell side efficiency. I had it shaded in a light blue rectangle. We went below that. Now we went 1, 2, 3 times we're in that area here. And do we roll over completely and attack this area here? That's within the realm of possibility. On the upside, it would just have to be them releasing something in the marketplace and then manual override, the intervention at the central bank level, where they just send it higher with just a dramatic, huge range that just keeps on delivering higher, 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 and powering through the high. 15-minute time frame for euro. Small little fair value gap there. We trade up into that. Neutralize any buy side liquidity there. Sells off, comes back up into a breaker, and then sells off and attacks the sell side liquidity into London close, and then we consolidate it into the end of the day. Again, economic calendar for tomorrow. This is what is on the menu. So at 7:45, euro dollar monetary policy statement and main refinancing rate. And then at 8:30 in the morning, euro, we have ECB press conference, and then the US dollar employment claims. Canadian dollar, you can watch the 11 o'clock response to the crude oil inventories as well. British pound daily chart. You can see how we cleared up this buy side liquidity, and then since it's done that, it's really came down a little deeper. Went down to basically the mean threshold of the down close candle. And I mentioned yesterday how I went back and forth in here. Since it did this, I had no real interest in seeing this as a bullish order block and seeing it rally, but we did see it dig down into the mean threshold of that candle. So do we see a stronger dollar tomorrow? I don't believe that we should, and that's what I'm saying. Like everything on face value, let's just look at it this way. If we look at the relationship of the jobs front in the U.S., that's not inspiring for the currency to go up. So if we look at the relationship between dollar and euro tomorrow, once they both release their news and allow sentiment to either be disrupted or design new sentiment based on what the market does, because we don't know. I don't want to speculate too hard about what euro or dollar is going to do. I'm just giving you my opinions, but I'm not doing anything with either one of them until after 8:30. So between 8:45 and maybe 9 o'clock, it's just whatever happens. I want to see what they do in the marketplace. And then once around 9 o'clock in the morning, New York time, then whatever's in place in the marketplace on a 15-minute, 5-minute, 1-minute chart, then I will have something I can personally work with. I would not be doing anything this week until this Thursday's data hits the marketplace, because everything prior to that is going to be just untrustworthy. We don't know for certain what's going to happen, and nobody should stand in front of those types of events or those news drivers, especially in a climate like we have now. All right, relative equal lows, sell side liquidity. We went down and attacked that and came back off of it here. Now, we have a small little imbalance there. Okay, so if we get a run up into that and then we reject, then we might go a little bit deeper into this tomorrow. So this is something to watch. But if we run above that and come back down and find some support here, that could set the stage for a run into this area here. And again, that's assuming that we get something in terms of weakness on the dollar. And I hate sounding like I'm doing plan A, plan B, but I'm just giving you things I'm watching for both sides because I don't have a directional bias. And because I'm trying to mentor you through honesty, I mentioned many times now, there are times that I'm not going to know. And when I'm not confident and I don't see what I should expect to see pan out, or if I see something not poised to move, one directional, if it's not easily one-handed, higher or lower, I'm going to tell you. That way you know how many times throughout the year it'll happen for you or when to expect it. And also that it doesn't disrupt the underlying method. It doesn't disprove the method. It doesn't make us less effective as traders or analysts. It just means that we are sober-minded. We know we're human. We know that there are times when the unknown will be just that, unknown. We have no way of ascertaining, a bullish bias or a bearish bias. So we have to be neutral at times. And this is one of those instances where it's like that. So we had a little bit of a consolidation all through London and through the majority of New York session. And then finally we broke down, making the low of the day in London close and coming up and taking the buy side liquidity resting above these highs here. So yeah, I don't know. Like I said, I have no idea what they're going to do tomorrow. And to speculate ahead of these news drivers that's releasing tomorrow, it's a gamble. Okay. And I would rather not, have a hard opinion ahead of it and look right and not have it be attributed to skill, because it would not be skill. It would just be chance, and obviously in the same coin on the opposite side is if I say something hard-lined about what I think may happen tomorrow and it doesn't pan out, then it would be easy for some of you that are just too early in your development to think that, okay, well, this is a flawed logic or it's a failed trader's analysis. It's a period where it's so 50-50. I take you back to this all the time when we get in these periods where it does not have this one-sidedness that we look for. That's high probability trading, one-sidedness. And it doesn't require trend. It just requires an obvious likelihood that it wants to pan to a premium or to a discount. And we don't have either one right now. So we're in no man's land. And you need to be embracing that and be thankful that you're learning how to navigate periods of uncertainty, and your teacher can identify it and submit to it himself. So why should you, as a developing student, try to avoid that lesson? This is the lesson that doesn't get taught in books and courses and educators, because those folks don't know how to make money. Okay, they don't know how to make money because they can make money here and there, but they can't keep it, and they lose it during these periods where it just doesn't seem correct to be doing what they're doing, or when they do something, it goes the opposite direction. In these instances, this is when I would be trading with live funds in my early years, and everything that I would be doing, it would go the opposite direction. So now think about what I've been telling you. I'm sitting on my hands, but I give you my opinion. But I'm telling you, I am not looking for anything in my personal trading. And my analysis is not as clean. It's not as precise as it's been in other times. When I'm dialed in, when the market is obviously poised to move to a premium or a discount. But right now, I understand that my limitations as a human, the man, ICT, Michael, I know where my limitations are. And it took a lot of time to get to that. So by me showing you this and revealing it to you, being very candid about it, I don't look at it as weakness. I look at it as strength. And anyone that has left in the previous years or even in this year thinking that, it's worn off, the algorithms changed or whatever, it hasn't changed. These are just elongations of that I'm accustomed to and used to seeing occur. But this is just on another level. Okay, so everything out there is going to be hit and miss right now. No matter what you study, it's going to be hit and miss. But they're not going to teach you why you should sit still or try not to take any trades, because the intent is to keep you active, because you're here to learn how to make money. Great. So that means you better be learning how to trade every single day. Wrong. Wrong, wrong, wrong. Okay? So if that was the case, think about it. And I'm just going to move on after this. If successful trading, or quote unquote smart money trading, means everyday success trading, you would see billionaires, not millionaires, billionaires proving themselves as billionaires if that was the case. And you don't see that. So that's your litmus test. It's obvious. These folks are not making the money they pretend to make. And I'm telling you, when I can't make the money, you're learning why, where, how, and what constitutes those periods of uncertainty and how you navigate through that. So when you come in contact with that in your own travels, once you and I separate, and whenever this community dissolves at some degree, whatever happens that causes the end of this. Okay, I don't see it in the foreseeable future, but obviously something will eventually disrupt this community. We won't meet like this in the future to some degree. You won't have me giving you like attaboy, attagirl type, pats on the back and say, continue doing what you're doing and don't do these types of things. So you'll be leaning on your own experience. So these periods of learning, developing your eye and your appreciation for risk and knowing when not to do something, and even if something moves in these climates, you don't regret it because you know that could have just as well go against you, even though you knew that was likely to happen, but you're respecting the level of risk at the moment. If it moved like you thought it would and you don't take a trade, you're not upset because this climate doesn't last forever. This consolidation, these periods of uncertainty, they don't last forever. Greed is enormous in the world. And these central banks, they want to cannibalize. They want to eat, okay? And yes, they're making money in a lot of things that's going on right now, but there's a lot of money to be made with speculation too. And eventually they'll get these markets moving around again. They'll gyrate them and create some kind of, monster type move that's unexpected, some kind of whipsaw price action. And it'll create an activity level or an interest in the marketplace that has been waning. And that's when we'll have opportunity. It'll be salad days again. It's just easy trading again. But you have to know why you're waiting. It's not because of ignorance and you just don't know what you're doing. It means we do know what we're doing and we're respecting the level of risk, and we don't just gamble. We don't do that. But even in these instances here, you can still find 10 pip moves. And 10 pips, don't think of it as 10 pips in relationship or comparison to 10R, 15R. Don't even do that. Where is there an opportunity for you to make money? Making profits. That's it. This is all this business is about. It's not about trophies. It's not about titles. It's about how much money you can take out of them. And you could be a millionaire just doing 10 pip moves. You can do it with 5 pips. But to me, it's a little bit difficult to find a trade to scale with low enough risk with a stop that's tight just to make 5 pips. It just, to me, it doesn't make any sense. But you can find lots of setups where you can do 1 for 1 with 10 pips. Okay, risk 10 to make 10. And if you know what you're doing, the common misnomer is, you have to have 3R to be profitable. Well, that's assuming that you're trading retail logic, which is flawed. Here, we know where we're likely to be wrong, and we operate when we're likely to be right, majority of the time. That's the filtering process that separates you here, under my wing, and everybody else out there. We know when probabilities shift against us. They don't know that. All they're doing is following patterns. They're looking at harmonic stuff. They're looking at who knows what they're looking at, okay? But none of that stuff is linked to why the markets book the way they do. You're learning here exactly what caused these markets to do what they do. But we are realists. We know that there's going to be instances where the market's going to simply do things that just are unexpected or go in an opposing direction to what our analysis would indicate it's likely to do. So if we can identify these areas and climates where risk is so high and it's adverse to us, we don't do anything. And we're not upset about it. We're not growing impatient. We're not losing our minds because of it. We're thankful. We're appreciative because we are sober minded, we are focused, we're disciplined, and principle oriented. We don't have any emotional tug of wars going on inside of our heads because we didn't get our choice set up every single day this week. We're waiting for this little news drive or storm to be injected in the marketplace in Thursday's New York session. Once that occurs, we have obviously Thursday's remainder of the New York session, and then we have Friday. So that's where the spectrum of opportunity resides for this week in my mind. It still may result in a losing trade if I do, but at least I'm sticking to the processes that led me to my understanding as I have it today. And at some point, you're going to have to embrace that because that is real logic. That's wealth building logic. And it gives you the wherewithal to weather all of these ups and downs of development. There's going to be times when you hit it really strong for a long period of time. You'll be doing really, really well. Then you go into a tailspin where you just can't find your groove and your analysis is not on. You got to take a break, move away from the marketplace. But I don't have that luxury with you. Okay, there is no taking a break as ICT in the mentorship, which is why it's draining. And that's why I don't want to take any more students in, because a new batch of new students, they come in with this whole new level of, I need to know everything right now. Whereas a lot of you, even in the last group that came in 2021, you're warming up to, okay, I understand what he's doing now. You know, there's times when he really pushes it and he's dialed in and he's really precise. And he also knows when he's not going to be precise, and we're seeing it. But he's not teaching me to feel like I have to trade every single day. So you're learning, you're developing, and you're laying down all of these infantile perceptions of what you should be doing as a trader. Because when you don't know how to trade and you come into an industry like this, you assume that everybody's making a killing every single day and it's easy for everyone all the time and no one takes losing trades. You're learning that that's not true. And even someone like myself, that I think I'm in the upper echelon of analysis, and it's not ego, it's fact. But if I tell you there are periods and you're seeing it, that's the benefit of being with me for a full year, and you've been through something that I've never encountered and no one has encountered, which is this whole pandemic. So for 18 months, you've been able to see me either navigate or flounder in areas where, you know, other people may have been completely destroyed. So don't lose sight of where you're at and where you came from. And having that perspective in mind is reassuring, because it teaches you that, hey, look, I might fall off the path here and there, but I know how to recalibrate myself and stick to what works. And if you abandon this mindset of what I'm teaching you here, you're going to hurt yourself financially. And then when that happens, then it's going to hurt you from a psychological standpoint, an emotional standpoint. And once it gets into your head, the money is the problem, because you're wanting to get it back because you think that fixes it. But even if you get the money back right away, then you're presented with a new problem. You wasted time. I need to make up the money I would have made if I wouldn't have had that drawdown. And you start doing stupid things there again. And you fail to realize you're not doing what I'm training you to do, which is respect risk, number one. That's the first and foremost thing here. Knowing how you will lose. How are you going to fail at this? Now, it's easy as a new trader coming in. Everyone knows how they're going to fail. They're just going to take a trade and it's going to be wrong. It's going to go the opposite direction. That's not all there is to it, because you could do things wrong and make money here. I'm proof of it. So how do you deal with that when it's not skill that made you profitable in this trade or series of trades? Even though it's going to feel like you're smart and you figured it out, and you didn't. And then you try to do it again, and it doesn't give you the same results. And you do it again, it doesn't give you the same results. And you keep trying over and over and over again because you had that period of chance luck. And you attribute that as skill, and you arm wrestle with it until you break your account. And now you're thinking, oh man, I got to get this back. I told my friends I made money. I told my family I made money, or I wanted to quit my job. And I had made plans for quitting my job, but now I have this. I've blown my account. So now you created a whole different level of Olympic size task in front of you. Not only do you have to fix a problem that you created for yourself, emotionally, psychologically, and financially, but now you've invited other people to criticize you. See? You got to keep your mouth shut. Your money, your business, keep it that way. Mind your own business. And don't let anybody else mind your business. Anyway, too much talking. Euro pound. Daily chart. Okay, so you can see what we've had here. Euro pound trade up into that little imbalance I mentioned the other day. Traded into that, off of the breaker, and we had a little bit of a retracement. Overall, we're in this large trading range here, not wanting to do much. Now, by itself, because Euro pound is in this large consolidation, that is when the Euro and British pound tend to trend. So when this pair is in consolidation, that is the precursor to trending for Euro and cable, and they're usually moving in the same direction. Notice we're not seeing that. Notice that? We are seeing Euro pound consolidation, but Euro and cable are consolidating. Something is wrong. Something under the surface is taking place, and I don't know what that is, but this is against the normalcy in this market. So because this is occurring, that's why we're having this stagnant marketplace. Everything's being strangled. Every market is being strangled. Okay, and for all of you in here that swear by and leave your prayers at the altar of crypto, that market will be disrupted as well. It will happen. I know you don't want to believe it, but it's infected. Okay, as soon as they created a futures market on Bitcoin, they own it now. And if you don't want to believe NSA created it, that's your opinion, that's your belief, but that's what I believe it's what happened. Okay. Satoshi, that's just an illusion. That's somebody you ever seen him? Right. But this whole thing is manipulation. It's all manipulation. And all these markets are being highly, highly manipulated. Enormous manipulation is going on. And it's been going on for a better part, longer than 18 months. And this is why I said on Twitter back in 2019, in the month of July, and for those of you that always saved all my stuff and all my tweets and such, and you know this is the truth, I said that something wicked was coming. And then I said it again in October 2019. I said something really bad's coming, and it's going to be worse than September 11th because they were mind raping everybody after September 11th, 2001 with this terror threat thing. And look what they've done to the entire world. The common cold, you're going to die. Everything is fear, 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 fear. And I don't want any of you to fall victim to fear. I don't fear all those things. I don't fear the market. I don't fear the opportunities that I miss. I don't fear not being able to find future opportunities. I'm telling you with the things I'm looking at, so that way I'm not just pulling things out of the randomness and out of the air, saying here, this is what I think is going to happen, and then hopefully something sticks. The fact that this market right here, the Euro pound, is in a large consolidation, we should be seeing trending models in Euro and British pound. Either direction, higher or lower, it doesn't make a difference. Because this pair is consolidating, that means there's no manipulation. Remember I was giving you the analogy yesterday with the roulette wheel, where everybody thinks that you have a 50-50 chance on that by either betting on black or red. And that's not true because green can come up. And other times I've already talked about how they use the manipulation of the green to take the whole board away. Because if there's large bets that are comparable on black and red, in other words, in short, without going through it all again, the roulette table is rigged. The whole casino is rigged. But the table itself is rigged in such that the eye in the sky watches the tables and they count how much money's on the majority of black or red. You think the numbers are what they're caring about. They don't care about the number. The number is just the red herring. You're going to come in with your favorite birthday, your kid's birthday, the day you got married, the day your mom and dad passed away, whatever. Something is a significant number to you. So you go in and you put your number down. They don't care about the number. They're looking at the color. So that color aspect, they want to see where is the majority of the money at on the table right now. On this spin, that's why they say, okay, no more bets. Why? Because they have to give the counter in the eye, in the cameras above, to count how much money's on the table. And when that wheel is spinning, okay, that ball, inside that ball is metal. And that metal ball is reactive to magnets. And underneath the squares that have the number colored around that wheel, these little paddles go up. And so when they want the majority of the money on red, it could say, let's for instance say there's $5,000 bet on red. Who cares about the numbers? But if the majority of the money on that roulette table is betting on red, black's probably going to win. Now, it doesn't matter what number, but black will win. But what if it's a black 6? Does that black win? No. But if it's just betting on the color, they get the win. But how do they get those people that want to do that 50-50 idea of red or black? If there's a close denomination between the majority of red and the majority of it on black and red being equal, let's say it that way, or very close to it, what they'll do is they'll manipulate the table to bring up green, so green clears the table, and now everybody's money is the houses. So that's why I'm saying if I was ever going to go into a casino, I would sit there and I would study the table for about an hour, and I would see if what I'm saying is what's panning out. Not all the time. They're going to throw some tables to let people win. But the majority of the time, I'm going to bet the last second where I see the least amount of money on one color. And I'll take the L, or the losses, when green comes up. Because I'm going to stick to this idea. And I'm not going to tell you how I know this stuff. Okay? Just know that that's really what's going on. Okay? And now, back to the analogy and how it applies to the marketplace. The euro pound is like the green on the roulette table. See, euro is black or red, and cable is the opposite color, red or black. And it's not an easy thing of just saying, okay, I'm going to trade euro or cable. It's, okay, are you buying it or are you selling it? And even that is not enough, because you got to confer with this pair here. Euro pound being in consolidation is it's the enforcer. Okay, it creates the opportunity for trending or negates the opportunity for trending. And right now, this consolidation that you're seeing here from April all the way to present in September, that should allow euro and British pound to be trending. In other words, it's having sustained moves, kind of like this. You see how it's moving down like that? That's the type of profile that we should be seeing in euro or British pound. But we're not, because the dollar's in consolidation and euro's in consolidation. Between the two of those, that's what's causing the stagnation in the Forex market. Okay? So there's a lot of people outside of Forex saying, oh yeah, Forex is too slow right now and the market's broken. No, I'm telling you why it's not moving. Okay? The guys over there on AstroFX, they put a YouTube video up on the secrets to crosses. Everything they said is stupidly wrong. Okay, I have no idea what they're talking about. In fact, if you look at what they said, the market did the opposite of what they said. Okay, because they don't know what they're talking about. What I just explained to you is the dollar index is first. You want to see, is it trending? Is it likely to go higher or lower? If it's held in consolidation, that means that you've got to go to the crosses like euro pound. Okay, so now what are we seeing euro pound? It's in consolidation. So we have dollar in a strangle, consolidation. We have euro pound in a strangle, in consolidation. The pairs like euro dollar and pound dollar cannot move. This is what's called holding the board. Now, this is a very long approach to doing that, because usually you only see it like intra-week or whatever. But this is happening on a macro level. And it has to do with all of the effects coming to roost at the 18-month mark. Like I said, when we first started this whole pandemic, in the early stages of 2020. I said, I'm all for the 14-day, let's stop everything for 14 days and let's see what happens. But if they go past 14 days, they're not going to let this off. And we'll be into this for years and years. And once we went into it, I said, here's what we got. They're not going to let it off. And I don't want to sound like I'm saying, haha, I'm right. I wanted to be wrong. But folks, you need to go back and do your history. Like, I put this stuff in video. I can't go back and change any of this stuff. It's 18 months now. We're at 18 months. Everything that was going to impact our global economies is coming home to roost right now. And you have no idea, and I don't have any idea how bad it's going to be. I just know it's going to be bad. And this is why I said stock up. This is why I said don't be in here trying to risk money. Don't be in here trying to push your your skill set that you're developing still, because things are going to get really, really difficult. But when they snap out of this, when they release the stranglehold on dollar and these crosses like this, then the markets will move. And that's only going to happen by an event. Something with a large degree of volatility is going to happen. It might be an attack. It might be, for instance, China attacking Taiwan, and then the U.S. either getting involved, which I don't think it's going to happen, and then the response of the world of China doing that to Taiwan, and those ripples will go through the marketplace. That's just one idea. But there's so many things that could pop up, and things that I couldn't even expect, or you could expect, just come out of nowhere, like a September 11th type thing. And we're coming up this weekend on the 20th anniversary of that. And they're already seeding and priming the public that there's going to be an attack, some kind of terrorist attack. So they're already getting it in your mind that, okay, it's going to happen. So expect it. But the people they say that's doing it or going to do it, they're not the ones that's doing it. And we can't change that. And there's no reason to be arguing amongst ourselves about who did this and who did that. As a speculator, we only anticipate the reactions in the marketplace as a result of these types of things, which for some of you is going to create a moral dilemma, because it's going to feel like you're profiteering off of chaos, harm, war, pain. And I used to wrestle with that, but it's like this, folks. We live in a fallen world, and there's nothing you are going to do about it individually. You're not. You're not going to change the world. You're not going to stop any of this stuff from happening. Okay? As a speculator, you just view it as opportunity. And then hopefully you can take the opportunity's profits and better yourself to weather the storm and maybe help someone else that's less fortunate. And that's the best you can do. Hourly chart, euro pound. And I know I'm doing a lot of talking, but I haven't been talking a lot lately. So I have a lot of things on my mind. I know there's some of you that just don't like the things I'm talking about. You hate it, but you paid for this, whether you wanted to get this part or not. This is what you get. So we dug up into that imbalance on the daily chart, broke down optimal trade entry, trading up into the high, low, premium, breaks down. Now watch this, runs right back up in rejection block here, then falters. So we have a low resistance liquidity run signature with this low here. So if we continue to break down, watch this tomorrow on the basis of that euro monetary policy statement that's going to come out 7:45 or so during the New York session. Euro pound on the 15-minute time frame, bearish order block, trades up into that, really overshoots it a lot. If I was watching this one in here, like if I was short, this would have had me a little unnerved, admittedly. But I don't trade the euro pound, but nonetheless, a very, very high level of manipulation intraday today on this pair. And again, you can see where the sell side liquidity pool is over here. So just be mindful of that going into tomorrow's data release in the New York session. And that, my friends, is going to be it. I know it's not a whole lot of good news. It's not a lot of exciting things, but it's good medicine. Swallow. The idea is knowing what you're supposed to know and when you're supposed to know it applies. Or in short, know when to hold 'em, know when to fold 'em, and know when to walk away. Until I talk to you tomorrow, be safe.